What is going on, guys, and welcome on into the live here. We're going to be going live as the market closes for the next hour and a half or so. Hold this bag for me. Yeah, I got a couple that you might want to take off my hands too, honestly, at this point. So that's kind of the deal. That's what we got going on. And currently sitting here was eating this cookie. Can't taste anything at all. So pretty sure we have COVID, but haven't officially gotten tested for it. But it is what it is. It's kind of how I've been past like week or so. A little stick, not too bad. I honestly had fever like 1 or 2 days, but ultimately has not been that bad. Hasn't hit me that hard. So I guess grateful for that, right? So what we got today is I want to look at FinViz really quick. Okay, we got an interesting setup, or at least it seems interesting or a little funny to me how things are playing out, right? Again, another day, another dollar, another red day, same deal. Everything is going down. We have way more stocks hitting new lows and new highs. Kind of the same deal we've been looking at, right, the past couple of weeks, months, small cap land, past year at this point, honestly, ever since, AMC and GameStop kind of ruined small caps for everyone. But here's the deal, right? Most stocks are declining today, more hitting new lows and new highs. And we're rebounding pretty nice off the lows. I mean, we were talking about in the live stream last night, some levels to watch. The chart looks really good. SPY, look at this. Look at the setup we have right now on SPY. So last time we had a big pullback like this, I believe it was a Monday as well. Last time we had a pullback to this degree, the next 4 days, we went up and hit all-time highs. So we could very well do that again to finish out the week or into next week. Who knows? But, this is setting up very, very strong bounce off the lows. You kind of get these crazy pull down days. And when there's not really any underlying, or there is underlying news, but there's not anything super specific that day, we've been noticing the trend is that these things have been bouncing back. So we'll see. We will see. But QQQ is one that we looked at in the live last night, and then it do a perfect T bounce. It was like exactly at the level we were looking at. I didn't change any of these lines. They've been here. This line here was at about 370. And where did we hit to today? We hit down to lows of 369.31. So, okay, give or take about 70 cents off, just below that level. And we bounced from 370. We're now up $7, okay? Almost $8 from the lows of the day. Insane. Look at that. Perfect. This is looking back at the daily levels right here. Key level right here we had at around 370. Psychological. And, we hit down to it. Great. Pullbacks are good at the end of the day. And then bounced super, super hard. So that's been what we've been seeing, right? So we're coming up to an area that was also an area of support, going to be resistance right now. So I would expect maybe a pullback into the close on some of the indices, QQQ, SPY. We'll see how that plays out. We'll be here for it. So I wouldn't be surprised. Pretty aggressive bounce, but things were down like 2%, 2.5% on Nasdaq, and now they're down less than 1%. So really, really strong recovery intraday. First, I haven't sold my SPY puts a few days early. It happens. I find, to be honest with myself, something that I've been noticing is that I do at least in picking out day trades or option trades, so much better on red days. So I had 3 of them. All 3 were winners. Now, I'm not, it wasn't sizing like massive. So, of course, the portfolio is down. But if you can make a few extra bucks, on a red day in the portfolio, minimize the damage, on the bounce back, it's going to feel that much better, right? So I had a QQQ bounce play from there, so I played that. I also played, what else did I play? Mrna. I got kind of lucky here. I shorted it when it originally kind of pushed up to here, up to that 218, 219 level. 220 was like my rough area, kind of as, my stop out point. And then it pulled back. I sold, I covered my short, or I guess I sold the puts that I had into that, made a few bucks on those, and it went for a rip, which, okay, cool. Let it do its thing, and, maybe I'll play it again tomorrow. Who knows? Coinbase, I also had as well. I played Coinbase on the bounce. Bitcoin was flushing. I bought Coinbase down here around like 215 or 216 or something like that, and sold those calls, up a nice chunk, up around 220. And so it went a little higher, but now it's up a little more, but I had a nice play on those as well. So it took like 3 trades like that, and all it really was in my eyes was finding that Coinbase was down like 6% at the time. Okay, this is down a lot, really, really fast. You're probably going to get a bounce. Look back to the left, and we had some support down here towards these levels of 215 or so. So I like that for a bounce spot, and it's kind of what we got. So wasn't anything crazy, wasn't anything with like huge size, but it was a couple little things, so I can't complain, right? We shall see, though. OCGN pushing up. Let's take a look at it. Not really too much action across the small cap space. OCGN's having a nice day, though. I will say that some of the vaccine stocks seem to be doing pretty well. This had hit new lows here, and then it bounced off of those lows, and now it's pushing up 6%. So it was down a good bit. Now it's up, which is pretty interesting. Pushed up, and maybe there was some news in pre-market here today, which is why it popped up. So I'm not surprised there. I was eyeing up. I've been looking into Mesa Air. We talked about this on the live last night. I'm eyeing this up as a play. I do like it a lot, especially with some of the with just the market being down, to the degree it is. This is the time to be picking up those plays that you think will do better potentially in a rising rate environment. And I think that some of the airline plays and some of the recovery plays are more of the value plays right now. I think are going to do better. So that's one I like a lot, and I'm eyeing it up, especially with the market being red. Everything's red. It's tough because you think to yourself, well, these stocks should do better in a rising rate environment. These should do all this stuff aside. Doesn't matter when the market's down 2%. There's not many stocks that are going to hold up in that environment. So that's kind of what we saw across the board. But this is the type of day, down 2% today for this. We were looking at buying the July's $5 on the stream last night. So these are going right now. 135-ish, 137 was the last order that went through. Do the math on these $5, right? Right now they have about 57 cents intrinsic. So yeah, you're going to be playing with about 80 cents of extrinsic right now, but you have about 6 months on them roughly. And if we get a move, we're looking at a move on Mesa. I would say a gap fill here up towards like $7 is very, very realistic in my eyes. $7, those contracts will be worth $2. So you buy them now, you're going to be up like 50% roughly if you get the move to 7. And if we get a move to more than 7, you can be up 100% plus. So I think that's a really good trade. Even just shares could be a good trade too. This went from the lows at like $2 to 17. And even just this time last year, it went from around 650 or so, 630s to 17 within, a month and a half, 2 months. So I like that a lot. This is one that I'm eyeing up. I want to trim something. The thing is, I need to trim something out. So I got, my heavier positions on the other airline plays, but I got to trim something out. So I'm waiting, let something just got to move here. Like whether it's Vector, I don't know, cut a loss or something. I'm thinking, when I cut one of these positions, then I'll get into this thing. NSPR had a couple little loads today, or at least one. I mean, the 48,000 shares went through. So this thing was looking really nasty, and then hit new lows. New 52-week lows, and then it has a rebound at really nice, up 1%. So there's some bidders now coming in the tape here. We'll see. Could be a sign of some news to come on this one. It's a low floater, super beat down small cap. It's one of my favorite positions, at least, that I like. And the market continues to push up, man, into the close. So it's interesting. It really is. Skills may go red to green soon. Look at that. Let's take a look. SKLZ. We talked about that one on the live too, right? This is a nice one. For some of these bounce backs, right? Skills, look at that. 607 went long at 584. That's nice. Look at that right in here. Beautiful setup. Now it's pushing up. If it goes red to green, this could be good. Here's the thing. I think with some of these names, right now, it's difficult to say, what day, because you hold overnight. The problem with swinging has been super tough lately, right? But when we do get a green day on the Qs, on the tech plays, some of these plays could bounce 10, 20% like that. So that's what I'm looking forward to seeing, like, okay, what day that is, number one, and then, when we get those, which ones are the rippers, and they could be really nice. They can pop up and hold trend and go for a full day like we kind of saw with NEO about a week and a half back or so. So 100 MA on SPY, it's been holding up nice. Let's take a look at it. Let's take a look. Let me go to my indicators. Let's go to moving averages. Let's edit those bad boys, and let's add 100 moving average in there and see how it's setting up. Let's go style here on the 100 MA. Here it is. Yeah, look at that. That 100 MA, the past couple of dips. You're sure right about that. So that's right there at like 455. We got like within like $1 or $2 off of that level today, and it's bounced again. So the 100 MA is doing well. A lot of people have been looking at, a lot of people like to use the 9 EMA for day trades for momentum plays. I'm kind of curious about testing the waters with that. See how it goes. Thanks so much for the take on Mesa. I think it's a good play. I really do. So I'm looking at it saying I got a good amount of exposure airline wise, but The second some room clears up, let's say I'm able to clear $1,000 of buying power, I'll probably toss $500 and buy 3 or 4 of those calls, the $5 calls, and and look for a 100% move for the next couple of months. That's kind of how I would look to play it. I guess it could be a little bit higher risk than, let's say, some of the bigger name airlines, but the reward there is huge. Even just shares, honestly, even just shares. So, but I think the $5 calls. Let's go back to that thing again. Let me move this moving average out of here for a sec, just because I like to use my basic too. But everyone to each their own, right? You can do whatever you want. Let's pull it up. I have a kind of a support right here at this 516 low we saw a couple weeks ago. Lines up with the high back from 2020 back in June, looks like. So I kind of want to see that area hold. I think it will. I don't think we're going to see more lows because I think we're honestly getting to the point where, like, if the airlines hold up the next couple of weeks, we will be getting to that point where all of a sudden PR start coming out and news starts coming out saying we've passed the peak. Because it's going to happen very soon. The acceleration of stuff is flying. For those who missed the first few minutes, I've been eating I haven't been officially tested, but I can't taste anything. It's been 3 days. I can't taste anything at all. I mean, and it hasn't been that bad. It's honestly been just a cold. From my experience, if I didn't know COVID was going on, for me it's a cold. But I think that because of the new variant and whatever is not as severe, it's accelerating almost like the common cold in terms of everyone's going to get it in the winter, right? Okay, you get it and you move on to recover, and the backside of that curve is going to come crashing down. And next thing you know, right, all these recovery plays are setting up really, really nice. So we'll see how tech responds. I personally, with interest rates, that's going to also line up with coming closer to that first initial rate increase. Now we know it's coming, so how does the market react to that? I don't know. It'll be interesting to see, because it's not we didn't know it's coming. We don't necessarily know. I don't think the market's necessarily pricing in 3+ rate hikes. So if we get a third or fourth rate hike in this year, then that I think will be, somewhat of a devastation or a little bit of a blow to the market. We'll see how, things progress as we get to those points, but those will be the blows, I think, to the market right at that point. I also went with Starbucks. I want to see it hold up. I'm going to give it a couple days. I want to see it hold 104. It's holding 104. That was the lows back here from earlier in 2021. This could be setting up for a really nice recovery. I changed my position to the 115, so I'm a little bit closer to the money. I had 120s, but we're out to March. So I'm looking for, really within the next 2-3 weeks, I'm looking for a kind of a same type of move if it wants to play the same range game. I don't necessarily need to go that high. If it goes to 110 plus, 112, I'll lock gains on those, but I'm looking for kind of a same type of V-shaped move back on Starbucks, similar to the range it's been trading in the past couple of months. So that's a plan there. Nothing huge position size wise, but that's that. And then also Disney, I have in my I put this in the Robinhood portfolio. Here's why. Again, if it fell down to the same level right here, it's holding 154. As long as Disney holds over 154, I think Disney's going to fill this gap at some point. So we get up into this gap. Any strong day in that gap, I'll probably take my position off the table on the Robinhood portfolio, and then that's really what I'm looking for. I have March on those as well. It's also a Pelosi play. Paul and Nancy bought some Disney calls out to next year, or at least the end of this year, if I'm not mistaken. I forget the exact expiration date on those, but that's when they bought. So perfect play is buying the dip 1 hour after opening and short the last 10 minutes of the day recently. Yeah, well, I'm curious to see. We've been noticing, right, that there's been that last 10-minute pullback. Let's see if it happens again today. We got obviously an hour out till that happens, but the stronger we kind of push up in the next half hour to 30 to an hour, right? I would be on board with that type of idea, because we kind of recover really strong. We were down so low. I mean, I might as well just kind of finish the day down over 1%, right? We're already there, right? Let's just take the pain and move on, and we can have a bigger day tomorrow or bigger rest of the week. We'll see. But for those who also haven't seen, here's kind of the progression or the trend that we're on. I mean, we can connect these bottoms too. Let's zoom this across. Okay, so from some of these highs, look at this. If we extend this out, we might have to extend this a little bit further to kind of line up. So we started this trend right here on November 4th. Let's see if we can get this extended out to that same frame. November 4th of 2022, roughly right there. This is on track for about, looks like an 11 to 12% return if we kind of trade at the top of this trend line. This would put us in, let's see, connecting these, yeah, kind of on the same pace. Connecting these out, yeah, I mean, we're pretty much in line. It's about a 16% return if we follow the bottom trend line from here. But you're kind of in that range, which is like roughly average. So this is kind of the progression that we're looking at. We'll see if this holds up. We'll obviously keep drawing these lines and trends and stuff the next couple of months and see if one cracks to the downside, if we consolidate longer or whatnot. But I mean, we're back onto at least a much more reasonable pace in terms of the S&P. We'll see if, which one of these holds up better. But I kind of like how it's setting up. If we kind of hold trend with this top trend line resistance being our resistance for this year, then we're on a much more reasonable pace, and things shouldn't be. I would imagine things should to some degree normalize in the markets now, right? Having the usual cycles, and we're not going to have like crazy, just everything goes up every day, and it's back to kind of normal, if that makes sense, right? Concern the market might crater Wednesday after. Yeah, we're going to see what happens. I think a lot of that's being priced in potentially today, right? By a pullback today. The weaker we are in anticipation of that, so if we're down again tomorrow, then I'm not as. I potentially would be more bullish going into that data. We'll see obviously what the numbers show, but I think a lot of people are in the market is in general realizing it's going to be pretty bad, and so I don't know what exactly the threshold is going to be. Like, how bad does it have to be for it to be like, okay, devastating blow, market pulls back, another 2% that day, or could it be one of those situations where it's not as bad, or it comes in line with expectations and the market already priced it in the prior 2 days, and then we have a bounce back day or maybe a flat day? I don't know. That's kind of, it's like a mind, it messes with your mind a lot when you kind of start thinking about that stuff, but sometimes that's how it goes, right? When everyone thinks it's going to be bad is when it's not, and the market goes up. It's like that's just unfortunately the game. And same thing when it comes to shorting stuff. Like when everyone's like on one side of a trade, but everyone's shorting the stock because, okay, there's no revenue, there's no this, there's no that, that's one of those stocks that all of a sudden runs. I think ACY is one of those that was like going bankrupt or whatever. No, I forget exactly if it's ACY. Maybe they did a split. They did a split, a 5-for-1. This thing was up at like 50 something bucks. I just didn't understand it. I really didn't understand it at all. I mean, I would just watch this thing go higher and higher and higher, and I was like, I don't. But because it was an obvious short in my eyes, it was, exactly why it wasn't. And the thing went even higher. So, yep, that's kind of part of the game. I didn't buy any dips on any of my small caps today. Didn't do anything. I just not that I'm like. I mean, I don't have much buying power as it is, but I just let them do their thing. To be honest, I'm just gonna let them ride out, because you can have a day on these things that they're up 20%. Like we saw with NBRV like a couple weeks ago. This is one of those that I added back a little bit after selling some on the push, but the thing had like 2 days in a row where it was up like 10%. So it went from 51 up to 70. I took some off around like 68, 69, something like that. I added those shares back now here in the mid 50s or the upper 50s last week. And it's kind of how I'm planning on just riding things out for now on some of these small caps. We'll see if they bottomed out. Insiders also bought around 57 cents or so. So, I'm just going to let it do its thing. But again, too, right, another thing I was thinking about as well, on some of these small caps is like we're kind of at that point, in my eyes, where a lot of these things are dead in the water. They're just dead. They're bottomed. They're nothing. There's no one wants to trade them. They're going to be boring. And the second they have a little run, and then the next couple of days or the next week they get hit hard again, go for new lows, and it kind of flushes everybody out. But like that's the thing I think about some of these things is that from the lows on a lot of these names, not saying everyone's going to catch the absolute lows, but a lot of these things are probably going to run, 100, 200, 300, 400% on the next kind of, dare I say, bull market for small caps? Because eventually you're going to have that time. And maybe that shift is coming this year. We'll see. But eventually you're going to have a period where small caps are strong. And when they're strong, right, maybe they start floating up off bottoms. And so a lot of these small caps could slowly kind of grind and have 2, 3, 4% days, kind of stack a couple weeks like that in a row. Next thing you know, they're up 30% off the bottoms without having any news, any PRs. They drop some news, a PR, they get run up into an earnings or a catalyst or whatever, and all of a sudden everyone starts finding some of these things that are undervalued. Everyone starts finding them, and then they spike even further. So, but they already going to have that 20, 30% potential, graze up in anticipation of that. So a lot could change, right? You may think that these things need to go 1,000,000% now, and that's why I think this year taught a lot of people, and even myself too, about holding some of these bags. It was like it's even doesn't matter how much due diligence you do and all that stuff. The market tells you what the market's going to do. What the market's going to do. So it doesn't matter. Let's take a look at IWM, how that's doing today. Is it? Yeah, it again came down here, almost hit 210, hit 211, and bounced a few bucks. It's been a good trade too, honestly, from these levels right here. Anything under 210, I think, is a really good spot. But I saw Hill talking about this one too. I was looking on Twitter and I saw someone mentioning this one and saying to themselves, well, yeah, look out. IWM, this thing drops below this 208 support, whatever it is. Look out below. Yes and no. I mean, my gut tells me if we do get a flush out and IWM comes down to like $200, maybe it comes down a little lower, that's going to be a good buy. Well, we can bounce back up $20 within 2 weeks after that. Who knows? Because someone breaks support, right? Again, this is also rigged to the upside. If you look back through history, it's another indice that's rigged to the upside. Like if you look at Russell, it's rigged to the upside. Yeah, could it have huge drawdowns in periods like this? Yes, when no one wants to touch growth and all that stuff. Yes, but again, it's a rig to the upside. So any huge pulls, it's like essentially like if someone told you, right, that if SPY broke below, let's say SPY breaks below 450, it is over. We got a big flush out. Well, if you just think to yourself, well, wait a second, if SPY breaks below this level, maybe it comes down to like 440, 430, 420s, who knows, whatever it is. Would you be scared because it broke support to buy that? Personally, I wouldn't be scared to buy that as long as I have, my time horizon in line. If I understand my time horizon, I'm saying, well, the SPY goes up, over the course of history. Why am I so scared? So, obviously short term, yes. So supports and all that stuff is important, but on some of the broader indices, I think it's like almost like, okay, whatever, who cares? On some stocks that are, borderline garbage and whatever, different story, because some of these garbage stocks and these companies that are not going to be around for the long term, yeah, when they break support, it's scarier because they could keep going down and never come back, right? If they can't recover financially or they don't have cash or whatever. But I think it's a different story when you're looking at the indices. I wouldn't be, necessarily scared to buy those dips because you kind of know with time on your side, buying the red is something that most people are going to sell into, and you're going to miss out on opportunity. You can get rock bottom prices, to be honest, on some of these things, if you're willing to do that. All right, BRQS. Let's take a look. Let's see. Yeah, it's down here. My only concern is going to be, or my biggest concern is going to be, number one, we have a Chinese company. Okay. Number two, the concern is going to be it's under $1. So are they going to be at risk of delisting? Are they at risk of now having to do a reverse stock split to get over $1? Probably. So this has history of those spikes, but again, look at this. This is nuts. We haven't had them. I mean, we just even go back to back in 2020, obviously, 2020 is, was a year for small caps and stuff. But you go back to that frame, right? And every couple months at least, this thing would spike. So it was like almost like you couldn't lose. Now you haven't gotten any of that stuff on all these small caps. Like these things are going to new lows and it's just like tick, 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 tick down all the way. There is just like no end in sight for some of this stuff. But I mean, it doesn't look terrible. I mean, it's down 5% today, sure. But I mean, chart wise, if you're playing off of history for a spike and you're looking at this thing, I don't know anything, due diligence wise, they have cash and they're a $43 million market cap. I don't know. But if it can hold up around the 35 level when it starts to hold, right, this could be setting up for one of those big spikes. The last little spike you had was kind of when it was consolidating right here in the 50s and it popped to 75. It popped 45%. So yeah, these are, buying these, the risk reward is a lot better. I mean, I wouldn't want to short this thing. Are you kidding me? Like it doesn't, you know what I mean? Like I would definitely not want to short it. I would, if I'm going to touch it, I'm buying long, because your risk reward on the flip side is dramatically different, right? If you're shorting this thing, okay, this could go down to like 30, could it go to 25? Yeah. But on the pace we're at, it might take a while for that to happen. And it's also possible that some good news comes out from the company or the sentiment shifts and the market changes and all of a sudden everyone's going back into small caps and, growth plays. And next thing you know, these things have, massive bounces off bottom. So we'll see. Not as a long-term investment, but, if you're playing for the spikes like this, again, Bag holding from 57. Well, that's why. Okay, so yeah, I hear you. It's difficult, and I have the same kind of feeling on a lot of other stocks too, where it's like, well, you liked it there. Well, if you liked it at 57, well, wouldn't you like it still here? Yeah, I get it. And you're going to get on a lot of these names, you're going to get a spike. You're going to get this thing is going to run before it delists, before it does something, whatever. It's going to run again. The problem is that it may drop 75% before it runs, which is like, it sucks because, holding that. That's why the way that I'm going to be probably swinging my small caps going forward this year is going to be a lot less positions. So there were times back in 2021 and even 2020 where I had like 10 plus small caps all at once. Not going to do that again unless the market was that hot again, but probably not going to do that again. And this way, if things do get nasty, I'll always make sure I have cash to add and average down. So if I'm in a stock that I'm like, you know what, this is still setting up fundamentally, I like it. The only thing that's happened here is the market's taking it down, and now I'm down 25%. Well, if I can add to my position because I've got a ton of cash in my portfolio and I'm only in 3 to 5 small caps and I'm not going to be like super run thin across a million of them, then I can add in or manage my positions a little bit better. And this way I can bring my average down. Maybe I'm only going to be down 10, 15%. And then, when we get that 50% run off the bottoms for some of these names, maybe even more, right then I'll be fine. I'll be going green. I won't have a problem with that. I'll be able to manage my way out of the trade, nice and easily, calm, nothing crazy. But it's when you go too heavy right away or too early, which, okay, so you never know when is too early, when it's going to be. But if you go too heavy too early, you can get yourself stuck in one of those situations where it's like, okay, now I'm down 50%, down 40%, whatever it is. This thing needs to run like 100% for me to get back to break even. Even if it does, like, is it worth holding it now for however long it might take to get there? And I completely feel the pain there. So my thought process here is that, I don't want to sell. I hate to sell these things to the bottom, but it really comes down to opportunity cost. Do you see other opportunities right now that are potentially better? And if you do, then it's some of that, just cut it and move on. You're probably going to feel better that you moved on, and it is what it is. It's the lesson that you move on from. So that's kind of how I see it. Okay, today BBLG is one of those that is pushing up. It's at 58%. We'll see. Rally is up a good bit. Yeah, look at this one. This is an interesting one too. It's kind of pushing up. Oh, look at this. It kind of cracked our trend. Now it's right up there, and it's swiped right back up to those highs. So this is one that I think is probably, I wouldn't be against looking on the short. I wouldn't be going long here. But this is one that could go for more if it holds up. And it's been one of those recycled pumps. It's what it is. Let's just be honest. It's a recycled pump. The thing went from, the $2 area to 10 in about a month. And it started to crack down, but the market's super nasty and it's red. So where does everybody go to? Let's not look for the news, like the new play. This one's already run in the past. It's already got some short stacked into it. Well, we'll just run this one and make our money here. It's a recycled pump. It's what it is. And so it's back up to 8, whatever. This thing is probably not going to stay up here that long, but, the longer the market stays, the way it is, these things have potential, to stay up and play play some games up here. So yeah, we'll see if it can get up over 825 is kind of the highs that we saw back on the 21st. Over that could be key. So that's kind of an interesting area to watch for now. Wish we will have more short. Yeah, I 100% agree. That is one of the biggest things that I don't like. The more experience you get. Look at this thing. Pets. Holy jeez. Wow. That's insane. Yeah. But again, this is one of those types of things where it's like you can't short these because either there's no availability on some of these, or like, okay, now all of a sudden you look to one and you can short it, right? Let's say if I go to this one, BBLG. Let's say I want to short BBLG, right? If I want to short it, if I want to go 10 shares and short, insufficient shares available. So you can't even do it. So that's why I want to go, and that's why I would recommend like a trade zero for that type of stuff. I still know I haven't, tested that out, to be honest, on the short side, but the account is created. I'm waiting on money. So that is the deal on that. But we'll see how that goes. And that's kind of, who knows, maybe that's where I end up moving a lot of my, money at some point if I like the platform better going forward. But yeah, like it sucks because like even some of these things that gap in the morning at like, 6 a.m., 4 a.m., whatever time that gap up, and they're up way high, there's a period of time that you'll get that like, from 4 a.m. or let's say from 5 a.m. to 7 a.m. Eastern time, that like there's a quiet period, right? 7 a.m. is interesting because a lot of brokers open up their pre-market trading at 7 a.m. Eastern, like TD Ameritrade, I believe E-Trade, I forget exactly who, but I know like TD Ameritrade opens up at 7, so a lot of volume comes in at 7. But like if you can get access to trading at 4 a.m., like there's some massive, like look at this one, for example. Boom. This thing happened. This is it, 4 a.m. Here it is. BBLG at 4 a.m. pops up here. It goes to 550, okay? Immediately pulls back down to 363. Then it kind of grinds back up. But from this frame, right, from 5, you could see this thing kind of grinding back up. Okay, cool. Now it grinds back up, and you're going to play this thing with the risk of the high of the day. So if 550 was the high, it's at 521. Maybe over 5, you start adding into a position saying, okay, I'm going to risk the high of the day. And then guess what happens? From then until the market opens, it goes into a quiet period. You go from 520 all the way down to sub 4. I mean, I'm not going to hold the whole way, but if I'm in this thing for a short, let's say the break below VWAP, you got a 10% there, a 10 plus % there, or off those highs, you see a double top come in, or let's say you're looking to short this thing against that 550. Well, if you have an average, if you're up here towards $5, down to VWAP is 8%. So like there's all these trades that you really can't take advantage of on Webull that you could on other brokerage platforms because there's less restrictions for shorts and whatnot. So if you can take advantage of that, like there's a lot of easy low-hanging fruit on the short side, to be honest, on some of these things, especially in this market, on these market conditions. Now, of course, when the market opens, I wouldn't touch anything. I don't care to mess with stuff because you're one market buy away from halting up and being on the wrong side of the trade. But when things are quiet, when the volume isn't super crazy, and you can kind of make sure you can get in, get out, manage your trade, and you're there's a lot of opportunity on the short side. I really would encourage a lot of people to learn how to play the short side and learn both sides, whether or not you can even necessarily trade it, but just understand the thought process someone would have on the short side versus when, let's say, you're looking at the long side. There's a lot of opportunity both ways, and you can get yourself out of potentially buying something that is just stupid, if you're just thinking about being a short and saying, well, what would I do here if I was a short? You know what I mean? And it's really helpful, I think. Let's see. ABSI. I don't hold a long on Palantir right now, but I would honestly just toss it in the IRA and forget about it. ABSI. Let's take a look at the daily on this thing. It's been a little weird because this could be setting up too, because it's had a pop day last Friday, pulled back, held the 612 area, and now it's pushing again. Interesting. So there's some volume coming in there. Something's going on. I don't know what's going on, but something's going on. So whatever is going on could be signaling a bottom here with the volume coming in now. So I would keep an eye on that, or trade relative to the 615 area as a stop. Yeah, Palantir. Let's take a look. I don't have a long, but I mean, look at this today again, even lower. I mean, it recovered nicely today, but I mean, under 16 would have been nice. We were looking at this thing saying, hey, it could come down to like 1450s. It got close. It kind of got a little past halfway of our next level. It might still hit that this week. We'll see. But Palantir is a great example of a stock that will get killed in a market environment like this. But then it will have a 100% year like next year, or whatever. In 2023 could be a massive year for it. So it's one that I would be buying these dumps and just stashing that in the IRA and forgetting about it. Power hour. Yes, we have entered into power hour. Let's take a look at the overall markets. That's why I got up at 4 a.m. to check. Yeah, no, I agree. Personally, I will be doing that once I have access to shorting at those time frames. For me, I've just found that if there's any trades that I like from 4 to like 7 a.m., it's a short. I've just found personally, and I would want to be on the short side. So if I can't short, then I'm not gonna waste my sleep and go to bed at like 11 and get up at 4. And I can't sustain that personally, but some people can. I personally cannot. I need to get like 7 hours at least, ideally. Anything below 7, I can do, obviously, but it catches up to me within a week. Then I'm wasting my weekends because I'm sleeping in, an extra couple hours on the weekends, and the next thing I know, I'm wasting them, I feel like. And so, I don't need to mess with that personally. But if we got access and we had a better, shorting ability come 4 a.m., which may come very, very soon, with trade zero, then yeah, then that changes things. I'm gonna have to adjust the sleep schedule, go to bed a little earlier. You know, hey, I don't care. I wanted to pull up. Let's see what any news right now. Let's see if we got any news. Stock coming off lows, worst day, and whatever. Nasdaq still down. Oh, here's what I was looking at too. Goldman's predicting the Fed will rate hike 4 times more than previously expected. That's impressive. I was seeing the stuff I'm reading, the ideas and the kind of the consensus, I believe, is that the market kind of had a gut feeling that, hey, we're going to probably rate hike 2 times, maybe 3. And I think that's kind of the idea now. The Fed is kind of in line thinking that they're going to have to do 3. Here's how I see this whole mess with the Fed and inflation and stuff. Here's what's going to happen. What's going to probably happen, I mean, of course, you know, anything ending can happen. Here's what's probably going to happen. This is all going to go through this year, and then we're going to get to a point where we're going to raise rates once or twice or whatever. And the next thing you know, the worry will go from inflation to deflation, and those who were kind of saying that all along will now say, hey, look at me, even though, like Kathy Wood, that was saying, that's what she's been saying, even though she'll be saying, hey, look at me. Well, yeah, even though she's down, you know, a huge amount and, you know, hasn't recovered from, you know, her massive, you know, drawdowns, whatever, she'll still say, hey, look at me, I was calling for deflation. And the Fed will go, oh, wow, yeah, deflation now. No, inflation's not a concern anymore. And you're going to just see, like, within, like, I would say, like, give it, like, 6 to 8 months, and you're going to see a complete flip-flop. That's just how it goes. So you're going to have, you know, huge drawdowns right now. Everyone's worried about inflation. They're going to raise rates 5, 6, 7, 8 times. Who knows, right? And then all of a sudden, you'll get to, you know, the second rate raise, and you'll, wait a second, now it's not as bad, and we're only going to raise twice this year or 3 times this year, and that's it. And now we are concerned about deflation. And, like, it's going to be the same thing. It's just how it is. It really, there's just the overreactions up and down. It's just, you're going to get the same, it's going to be the same stupid stuff. That's how I feel about it. But, you know, we'll cross that bridge when we get there. You know, of course, there's some people who say, hey, we're going to see double-digit inflation. And maybe that comes out next couple months. We'll see. Often get back to bed 4:30 to 6. Yeah, I mean, that you could do that too, I guess, obviously. Most people expect 4 more. Hey, we'll see. I think that's the thing. Right now, that's kind of the push is that, hey, now we're going to see. I think a lot of people think it's way worse. Inflation's way worse than it is. And I think that's been the case the past couple of months, right? The Fed hasn't been in line with like, okay, wait, it's actually a lot worse than it is. Now they're catching up. It's worse. And then it's going to be my opinion, the same thing is going to be the back half. Okay, now it's not as bad. Like once after everyone panics into it being so bad, then you'll get to a period of like, wait, it's not as bad. And then the Fed will be like, oh, we're actually, you know, correcting ourselves back. You know, all that. It's going to be the same thing. Like, you know, flip-flop, whatever. That's how I see it. But, you know, it is what it is. Okay, here's the Nasdaq. Let's take a look at the Nasdaq. Yeah, it looks a lot, you know, more interesting than the S&P. But, again, right, even though we had a flush out today, we touched that 200 SMA on the Nasdaq. So that's a spot we have not touched in a long time. You got to go back to, wow. You got to go back to April 2020. Was the last time we touched the 200 SMA on the NASDAQ. That's insane. So that just showed you that from April 2020, when we crossed back above the 200 SMA, we were so strong, and now the trend has slowed down for sure, which is good. I mean, we've been kind of, you know, we wanted things to, you know, kind of come back to reality. But we're finally there. So this could be, you know, obviously this could be a bounce point if we want to stay, you know, into the upside for this market and whatnot. Prior to that, every time, let's say you go back to 2019, we bounced off that 200 SMA very, very nicely on the NASDAQ twice, 3 times. Beyond that, 2018, we crossed below, and we stayed below for a while. So the NASDAQ that year pulled back from October through the end of the year. October, really, it was a 2-month pullback. That's what it was. It pulled back about 23% to the lows. In that span of time. Now, the small caps got killed. That was a lot of, you know, tech and growth got killed there too. So 23% from where we were. Let's see where that puts us on the NASDAQ. Yeah, oh yeah, that's pretty bad. That puts you here, which would be a massive, massive pullback under the 200 SMA. Be about to, on the NASDAQ here, looks like 12, a little over 12,000. So, I mean, that would be a lot. I mean, I don't know if we're going to go that low, but that would be a pretty big pullback. I personally don't think that's going to happen, because what we've been noticing is that the past year, almost 11 months, we've been in a bear market for small caps. The past, like, I would say week and a half, you can say a bear market for a lot of, bear market for a lot of things. I don't know if technically it hasn't classified as a bear market, whatever, but you can kind of say we've been in that, pretty bad market conditions and whatever past week and a half. But I would say you go back to November 15th is the date, maybe like November. A lot of growth has been in a bear market. So, you're roughly about 2 months or so on, growth being in a bear market. And then, small cap's been for a while, and now you're kind of seeing tech falling back. But the thing with tech is that you have such huge companies that lead it. So can it really fall that much? I don't know if it really can. So looking at the broader indices right now, which is what we're kind of seeing now, and it's showing us exactly kind of what the worry was, and was like, well, if you've already been in a bear market for small caps and for some of the growth, or some of these things are down huge, what happens when the indices finally correct or pull back? Well, you're kind of seeing it now. Everything just kind of dies. We haven't seen any kind of mismatch really, other than like one day here or there, where like, okay, now all of a sudden small caps are doing really well while the market's down. Well, we've had like a day or two of that, but no consistent. There hasn't been continuation. There hasn't been consistency behind that. So it's been the same kind of deal. I definitely should probably make this a little bit bigger, I feel like, because I put that smaller last night, but whatever. Okay. I have not touched on AMC, but let's take a look. What is AMC up to? Down 3%. Yeah, I mean, it bounced again really close to that same level. So it's holding that $21 area roughly. As long as it kind of defends that and holds, that's your support for now on AMC. Lines up kind of close to this high that we saw back on the initial run to start last year. So that initial resistance is now becoming a new support. So I think AMC is another one too. Now, am I a huge fan of it? No, not really. I wouldn't want to long it here. But if I was going to play it with just a technical play, I'd play it with, respect this support. And I'd be looking for taking profits up here towards $30. So that would get you like about a 40% run if it makes a move to $30. It's pretty good, risk reward wise, as long as it holds this level. AMC is also one of those that it could be a PR, it could be in the after hours, it could be one day that the thing kind of pushes and the thing is up, I don't know, 25, 30% like that. Is it something that's like worth, shorting, to be honest, for the potential for that to happen? I don't think it's worth shorting. Same thing with options too. You could be in options thinking this is going to flush out going lower, but then of course it could be one day away from making a massive run. And even if in the next, 6 months it comes down and hits your target, well, if you bought the wrong options and you bought options that expire in, 3 months, then you could be screwed. You can, have an option that goes to zero and like, well, now AMC did what I thought, but I played the options wrong. So ELYS, yeah, I love it still, but I mean, I'm obviously, it's one of those that I got out of because it broke below support levels and I was like, oh, okay, I'm not going to hold this thing all the way down. Some other stocks I certainly have. I held down lower than, I would have loved to hold them, but part of the game and I'm managing those positions and it is what it is. But ELYS is dumping down here under 250. They have some insider buys. Let's go over and look at some of this. FinViz, let's go to ELYS. They've had a good amount of insider buys as of late. They had this guy, Victor Salerno, buying here in December, bought in the threes, so you're now way below that. We had Gold Street Capital buying. Gold Street Capital is a 10% owner, so they own over 10% of the share of the company, I believe, so they have to file every time they buy. They obviously haven't. If you look at the amount of money that they were buying, they were kind of just nibbling. They have such a big position that this really didn't mess with their average too much. Even if their average was higher or lower, it doesn't matter where it is. They were kind of just nibbling away at some shares the past couple months. I thought, in a sense, they would pop up on some of the insider buys, and maybe it would kind of spark some attention or some volume, and it didn't work. That's kind of my speculation. We'll see. Maybe that wasn't what's happening. They actually wanted to buy more, but if they wanted to buy more, they could have just bought a big chunk more, and instead of buying every other day, they bought 10,000 shares, 20,000 shares. They own 4.7 million. So I mean, just buy a million more, right? If you're going to buy a million more. But they didn't do that. They kind of slowly averaged in. Maybe it's a way a dollar cost average. Who knows what their strategy is. But I don't know. Now it's coming down. If you look at ELYS, chart wise, it's really I don't know. It's in a weird spot. If you look back to the left, yeah, I mean, you have this high, you have some of these lows around the 230-ish area, so maybe that's a support area. Personally, it's one that I like. So when small caps get warm again, I'll be back. I'm not gonna necessarily go anywhere. I'll be back on this one and I'll be playing it again. But look at this extension to the downside. It held up really well until mid-November. Again, same frame we were looking at, guys. Mid-November is period where things that were getting hit got hit even further, and that was it. So 230-ish area is the area that I would like to see it holding. But until the market turns, the market's it's going to do its thing. They are a $58 million market cap. I forget how much cash they have. We can look at some of that too. Let's see. What's the latest update? Continuous management alignment leadership ahead of U.S. developments. They're going to have more PRs on this thing. We know it's coming. Appointment of Carlo Reali as interim chief financial officer and principal accounting officer effective 5th of January. There's probably some stuff in here too we can dive into. Let's see. Thinking this. U.S. operations and onboarding are strong, growing pipeline of U.S. clients. They're going to have more PRs coming out of different clients and different partnerships and whatnot in the U.S. It's coming. I have no doubt about that. But the problem is that those PRs are not going to do anything right now. It might in a better environment, but it's not going to matter right now. It just won't. Conference call. Encouraging earnings they had from October back in here. This just came out in November. I'm going to look for cash, see what they say. I forget exactly how much cash they had. Cash. Position. Let's see if I can find it. No, they didn't mention cash. Okay, apparently not. Interesting. They kind of just went through their whole thing. $75 million resort reinstatement, 30% incoming. You have to go to BAM SEC. Let's go to BAM SEC and find it. BAM SEC ELYS. This is just to get you all the information right here. Go to the third. I pulled this up already. I'm going to go to cash and boom. So they had about $9.5 million in cash as of September 30th, which wasn't really a lot. So a little concerning there, to be honest with you. Also kind of why I took a little bit of, I just wasn't a super huge fan of that. I am holding, the small caps that I'm holding are ones that have a lot more cash on hand and are at lesser risks for offerings. Not that I think that they're necessarily going to do an offering, but they could easily drop one and it wouldn't, maybe it wouldn't be as bad right now, but they can easily drop one. After an offering, I would absolutely love it. And that's what I'd be buying, a decent position on the ELYS. But in the meantime, hey, this is not a bad spot, I don't think, overall. VISL is the same thing. I mean, the company's been growing, the stock hasn't. Look, if you just look at the trajectory of the stock, I mean, the thing has just been on this. You go back. They had one day back in October. You go back to like the last spike up to over 3. The thing has been just in a short. It's like a short algo is running it. It's literally just a short algo, and like that's it. And so it's just slowly getting chopped down the whole way. Eventually these things go, and you guys can see how these stocks move. When these short algos eventually come off and they stop, doing their thing, look what happened, back in 2020 and 2021. The thing had a crazy run. It can go on these runs. These things are not, this is how small caps go. You might think these stocks are dead in the water, and you're looking at this thing at one saying, man, this thing is like dead, it sucks, and whatever, and it's not moving and whatever. But if you look at the stock company and the due diligence is there, and you're like, hey, there's no reason for me to sell this thing right now. Everyone else catches on to this thing at like 250. You already were at 1. You're selling, your shares there. You're riding free shares, and the thing goes on a 300% run. Now, I'm not saying that's going to happen again, but the same idea from here. The thing goes on a 100 to 200, 1 to 200% run, 150%, right? From where it's at right now is very, I'm not saying it's like, in like a couple weeks, but on a spike, on a PR, on some positive news, or maybe it grinds for a couple months. And next thing you know, this thing by the end of the year is kind of grinding it back up to 2, and then it has a PR and spikes to 3. Right? Like that's kind of how these things are going to go. The quality stuff will eventually get, pushed at some point, but a market like this, it's not going to matter, right? Which is why, I honestly can add a lot. I've been pretty good about how I handled VISL, because it was one that, it's been downtrending, but I was able to manage this a little better. So I sold on this pop and I re-added some shares, and then my average at, where it's at is not that bad, just under 150. And, I definitely could buy more. So I'll be planning on doing so on when I have more cash available, and just to kind of consolidate. So I want to see 1 or 2 stocks go. Once 1 or 2 go, then I'll be able to consolidate and, and move some money back in, average down on some of these other ones that I like that haven't gone. So we'll see. We will see. BBAI. But I know a lot of people are in this boat, and it hurts. This thing has gotten killed. I don't know anything about it, though, but it's down here towards 5. I mean, who knows? Maybe these are really interesting charts, because they could easily bounce back to like 8 to 10 and go, huge run, or they could keep selling off and go to 2, I mean, you got to know the fundamentals behind this one personally, just to jump in, but it's also a tech play. It's tech, software, IT. I mean, it's going to get killed. All those stocks are getting killed right now. Add in a SPAC, and you got a recipe for something that's going to continue to get killed as long as these tech plays keep getting hit. Let's see. Let's take a look at some of these airline plays. Yeah, these are getting kind of hurt today. Save is down 4%. JetBlue down 3. That's a pretty big pull on some of these things. I'm surprised they're pulling back that much. Maybe there's some virus concerns. Actually makes sense, because mRNA is up. So some of the vaccine plays are up. Airlines are down. So maybe that's kind of one of those underworkings going on as well. Little, recovery plays getting hit, and the vaccine plays popping again, I guess. Cases up, pretty high. I don't know. I haven't really seen too many PRs on that front. What's Pfizer doing? Let's take a look at Pfizer. Yeah, Pfizer's up today too. Pfizer's kind of building higher lows. This could go for a little run too. But yeah, it kind of seems like that sentiment shift may be going on. Or at least a somewhat of an underworking sentiment shift. So again, like I've been saying, if you haven't had a chance to get the airlines, you're down. A lot of these are down today. This could be your day to snag some of them if you like it. This period last year, I'll go to American to show you again, the chart for those who are not familiar. This period last year, I mean, you go back to February, American Airlines from February through mid to late March went 50%. And that's an airline stock. It's not a tech play. It's not a small cap. It's an airline play. They got it's a $12 billion market cap company. Yeah, there's a lot of competitors out there, in the airline space, but there's a lot of opportunities, I think, as well. So the one we've been looking at is Mesa. For those who are joining now who haven't seen, Mesa is a smaller cap airline play. But the range on this thing is really interesting, because what happened last year is in that same span, this thing from February through mid-March went 165%. And, it's back even lower than where it was this time last year. Now, I wouldn't expect it to go to 17, but we were saying, hey, if this thing goes to 10 this year, in the next couple months, next 6 months is very reasonable. I think it could go to 10 if we get the recovery and the bounce on airlines that I'm expecting. Well, then, yeah, and this could be really good. The problem is that a lot of the tie-ups with the airlines they have some other stuff going on behind the scenes. They're saying that a lot of them are saying that the movement out of the pandemic is actually proving to be harder than the potential the movement into the pandemic, which is, obviously not encouraging stuff to say. But that said, I think it doesn't really matter. Everyone wants to get in before the crowd. So we're going to see, I think, a big shift into the airlines the rest of this year. So that's at least my biggest play. BRK for a long-term hold. Let's take a look. Berkshire Hathaway, right? Yeah, I mean, it's killing it, right? Because they got a lot of boomer stocks, as they say, right? Well, because look, Berkshire Hathaway didn't do anything from May through end of the year. It didn't do anything, but they're in a lot of these more value plays. From my understanding, that now they're doing better in the rising rate environment. Tech getting hit, they're doing much better. So this is personally, this is something that I'd be looking at when tech is ripping, you're going to get a better deal on Berkshire Hathaway. When tech is going crazy, go for something. That's when to look at this, not when tech is selling off, because this could easily kind of consolidate and just kind of chill whenever that tech bounce comes, which who knows, maybe it comes this week, maybe it comes next month, maybe it comes at the end of the year. I don't know. But this could then, it could have a nice run in anticipation of that at some point. But let's see. JP Morgan is another one that I kind of like, honestly. Look at the banks. JP Morgan here is down barely today. Let's see Wells Fargo. Let's see how the banks are doing. Wells Fargo's up. I mean, come on. Let's see. Citigroup is up. I mean, this is kind of cool to see, though. Prudential insurance play. Yeah, that's pushing up. Very similar chart. I like the JP Morgan chart the most for a possible breakout play. Ideally, I would love a pullback close to the trend line. So a $10 pullback would be amazing. I don't know if we're going to get it, but maybe a pullback at least towards like 160 would be a better risk reward entry for JP Morgan. But I think JP Morgan could be setting up for a really nice run. $200 this year could be a realistic target. So, calls out to give yourself time, but this could be really nice on a JP Morgan move up, breakout for highs. So I like that idea. Let's see. Pretty sure they have about 20 to 30% cash. Yeah, they hold a lot of cash from my understanding as well. Yeah. Definitely want to buy when it's running up. Yeah, I would say that you're probably better off with a tech on a tech bounce, so that you'll kind of see the rotation, and then that's a better time on something like that. But when tech's getting hit, it's going to do pretty well. Look at some. I'm not sure exactly what they hold, but Coca-Cola is another interesting one as well. Coca-Cola is barely even down today. It's down 3 cents, down 0.4%. Look at Coca-Cola's chart. And this thing has been killing it really ever since end of November, killing it. So let's see. Thoughts on SPY for tomorrow? I think here's the thing. If SPY pulls tomorrow hard, well, here's SPY, right? This chart to me doesn't tell me pull back. Why? Because of how aggressive we bounced, and this is setting up really, really nice because we're closing up towards the high of the day. Now, okay, yeah, we gapped down. Yeah, sure, we're down, 0.75%. Okay, we'll see how we close the next half hour. We've been seeing those flushes at the end of the day. We'll see if that changes today. We got a gap here to like 464, so that could easily fill today, even maybe tomorrow, who knows. If we are green tomorrow, then I would be cautious for Wednesday. If we're red tomorrow, I would be potentially bullish for Wednesday. I think at that point, how much worse can it get? And I think we're potentially factoring in a really bad report, especially with the Fed coming out last week, going into the CPI release on Wednesday, with the Fed coming out last week and, with that minutes report and saying what they said. I think everyone kind of already has a pretty good expectation for what is going to be coming. And then now, unless we see a really big kind of miss up or down right on CPI, we'll see. If it's not as bad as we thought, we should see a rip. If it's way worse, then yeah, we can pull back. But I think in between, I'd be cautious on that in between. We can easily just kind of like have crazy reactions and then kind of like flatten out and do nothing. What's a good entry for VISL? I mean, honestly, I think it's a good entry right here, down towards $1. It's got support around this level. It's kind of down towards the lower end of that level from this time or from back over a year ago, if I'm not mistaken. I'll go back to it. Let's see, what's the weekly chart say? Go back on the weekly, or let's go back to the daily again and zoom across the left. We had hit down towards this level back in 2020, and it bottomed out really nice. The thing that's nuts, though, is that you go back to this company. Now, of course, 2020 was that year of 2020, and a lot of stuff was trading way over where it should. This stock was this company, right? Earnings wise, just business wise, fundamentally it was lesser, in my opinion. If we can go back and look at the earnings reports, was less impressive at this time, back and then than it is now, and it's lower. It went lower today because you're seeing just all these things get hit. So I can't get myself to sell something like that because it's a fundamental. In my opinion, it's a fundamental play for me. That's for me, though, not for everybody. So some people can't hold it, and I personally will be looking to add more as I clear up some other positions and have cash. But that's personally my play, and that's how I'm going to handle it. But not everyone will, handle it the same exact way. Not everyone has the same risk management and approach and all that stuff to their play. Another thing too is that any of these small caps, if they spike 10, 20%, or if they're up that much in a day, I'm taking something off, whether it's, a quarter of my position, it's half, whatever, I'm taking something off the table. So that's another way to manage this and to handle red and handle that. Cause the risk reward here on a short makes no sense. Maybe I'll make 5% over the next week on a short if it kind of just ticks down to $1, maybe, but I'm at the risk of this thing any day running to $2 on a positive PR, on news, or this sentiment shift in the market, right? If things shift, then I'm at a huge disadvantage if I'm shorting it now, in my opinion, right? Now, if you knew, and if you had the control of the algorithms and you knew, okay, well, I know that big money's not coming back here. I know that the algorithms are never going to turn back on and turn, to the upside for these small caps. If I knew that, then you can go with the short on these things towards the lows. Yes, but you don't know that. So you can't, I personally could never do that. Here's SPY again. So if we close up here towards the highs, then, hey, and that's a strong idea for tomorrow. So we'll see. Could be setting us up for, a little bounce back and forth before the big day on Wednesday, and then nothing happens. Could be setting up for a disappointing, finish of the week. But that's at least my thought process there on that. Let's go back to this. How is this setting up? Not as bad, if I recall, in terms of advancers and decliners. We're seeing about 75% declining versus about 22% stocks advancing. Almost 1,000 stocks hitting new lows today compared to just under 200 stocks hitting new highs, which is great. Yeah, so here's a good way to see it. Yeah, you're seeing healthcare is the bright spot. Some of the diagnostic plays, some of these healthcare plays are actually doing really well compared to tech, and then compared to where's travel? Here are the airlines. They're all down a good bit. So yeah, I think what you're seeing is that, I guess, virus kind of concerns or the money flow into some healthcare plays and out of the recovery plays, and I think we'll see how that plays out the rest of the week. And you got the jockeying back and forth. That's part of the game, right? mRNA is a really interesting one. I would love, the problem with mRNA, and honestly, I'd say I keep spelling it wrong. mRNA, here it is. Yeah, it's holding up. If this thing kind of squeezes out tomorrow one more time, goes up to 250 plus, I like that for a possible short idea. The problem is, if I was going to do that, right, I would want time. So I'd go out to March. You go out to March and you buy, let's say you buy the $2.30 puts. They're going to cost you $25. So, this needs to go to 205 for you to break even. Is that, worth it? I mean, go to the graph here. For you to break even, you need mRNA at 205 or less by the expiration. Obviously, if it makes a pullback in the next week, 2 weeks, then yeah, you're fine. But you can easily get screwed here if it doesn't do that. So you're essentially betting on this thing going under $200 by March, which I think is very realistic, is in my opinion. I think we can see that. I'm looking for this 190-ish, 188-ish area as my target to the downside. But if it just kind of chops along for a while, then you can easily get burnt on those contracts. So it's a little bit of a challenge, which is why, okay, then maybe just short shares. And yeah, well, from here to there, to that target, you're looking at like 20%. So maybe that's not a bad idea. You're going to risk yourself a lot less, but you're going to tie up more capital because you're going to need more capital to make a dent on a short like that. So, play the game. Play the game. Let's see. I'm curious how some of these other tech plays. Salesforce, look at that, recovered really nice. Hit 218 this morning. Really? Wow, yeah. That thing was a monster from the lows. Look at that. I mean, these individual plays, look at this. From the 218 lows to now, the thing is up 4%. I'm sure that some of these calls went nuts. If you go let's look at some of these calls. Let's say I was to buy a 225 call earlier today. Just showing you guys on some of these bounce days where tech sells off huge, like the bounces are huge. So you could have bought these things earlier today at 205. Okay, now you're not gonna get the bottom. Let's say you bought it like 250, right? The thing is up over five. It's trading between 505 and 550. You're gonna get 100%. So you got 100% on from the bottom on some of these CRM calls there. I think a firm is another one that you probably got some really nice. Let's take a look at a firm. What's a firm's chart? Yeah, from a firm hit 71 and then push. I was kind of a little cautious there, saying, yeah, I kind of wanted to see a firm pull back a little bit more because it did barely fill the gap, and then now it officially kind of filled it today. It really got that flush through. And hey, maybe it bounces from here. It also kind of, if you look at the trend line from back to the left, yeah, it's kind of at the trend line too. So maybe this is a bounce spot from a firm, but that had some range, right? This thing from the lows is up a good bit. So from those lows this morning, you're off those lows. You're up 7% from the lows, hit up 8% from the lows at the highest point today. I see those trades in my eyes that come off of, bigger picture key levels, support, resistance zones that I was watching. Like those are usually the best bounce back trades on a market like this. Same as Coinbase. I mean, Coinbase was the same thing. Now, I'm not sure where Bitcoin's at, but Coinbase is here. It's still down 4%. So don't get me wrong, it's down. But from the lows, look at Coinbase. Thing hit 214. It's up 3% from the lows. So options on those are these are for someone who's a trader only, doesn't hold stocks long, doesn't invest, none of that stuff. These are the days you live for. The volatility like this is the days you live for. I mean, these are ups and downs, shorts, longs. They're all up. They're great opportunities. Yeah, the problem with Webull's cryptocurrency is that the spreads are so nasty. It's like if you want to get in right now, you're gonna get filled at the ask. And I'll go to Bitcoin. If I'm looking at Bitcoin right now, I'm probably gonna get filled up almost towards like 42K, which it's like I don't want to. The spreads it's just gross. So I'd go ahead and I'd buy it somewhere else. So the no commissions and stuff, it kind of makes up for it, right? Definitely my lesson on BRQS. Have trouble figuring out where to put stop. Yeah, well that's the biggest thing. I think the best way to go about it is create your own set of rules, right? So either you can have a fundamental play and you're going to play this thing out fundamentally. So for me, VISL, I'm playing it out fundamentally. I will hold that thing. I don't care if it's a year or 2 years. I will hold that through until the fundamentals don't align with where the current stock is trading at. And I decide, hey, I need to get out. Whether that means the stock is up a lot and I'm like, this is now overextended. It's overbought. It's, too high. Essentially, I'm getting out. Or all of a sudden they come out with a terrible ER or not terrible. They come out with a bad earnings report. And I'm like, you know what? I don't know what's going on here. I don't like it anymore. I'm going to get out. That's how I'm playing that one. Every stock is different though. But some ways people can play it is you're down 20%, you cut it, right? So your intention is, hey, I'm buying this stock. I know I can't time the bottom. But if I ever go down 20%, that's my cap. That's my biggest loss. I know some funds will use, or some traders will use 10, some will use 15, some use 25, some use 30. It doesn't matter. Everyone's different, right? But if you're down 20%, you cut it. And that's it. No ifs, ands, or buts. And hey, maybe some of those end up running and you missed out and you just sold, you sold the bottom, whatever. But I would bet that a lot of them are also going to save you a lot of money. And so net, it's helping you because you now have a set of guidelines or rules that you're able to follow easily. And at the same time, right, you're going to protect yourself from huge downsides. So that's one way to go about it. How I would see it. That's, a great way building out that set of rules. Look at Bitcoin though. It's actually back to a spot right here. I don't know why my cursor went away. But it's back to a spot where it flushed out this morning and it bounced right back. And now it's kind of back up into the consolidation we've been seeing, right, the past couple of days. Interesting. All right, cursor's back. Something just happened here. I just saw, okay, someone just loaded. This thing got a 17,000. Someone just market bought NBRV. Let's see. Maybe that was a little tide shift there. Let's see. Yeah. Thing popped up. Let's see. In not like crazy volume, but we got a good amount of shares that just went through. Popped up a good bit. Okay. Interesting. I was thinking about potentially thinking about cutting this one, but then I'm like, I'm going to hold it as long as it holds the 50s right now and insiders bought. I'm staying in for now, and a little volume spike right there definitely keeps me interested. So we'll see. This is one that when the algos turn and when we have a positive day in small cap land, like 2 weeks ago, a week ago, this had a nice 10% plus days. So this could grind 10% like that, and that's kind of why I want to be there. And I'll trim into that. I added some shares back. I don't have a huge size there, but I'll add some shares. Hey, it wants to run, and I'll take them off. They're presenting right now, I think today. They have a presentation this week, first couple of days, and they have a vote, I believe, by the end of the week. So I might be looking to sell this thing by the end of the week. We'll see if we get a move the first couple of days of the week. All right, S&P, we're 20 minutes to the close. It's looking strong on it still. It's still looking pretty good. So we'll see what happens there. We'll see if I can eat this. And I mean, for those who are coming in now, I most likely have COVID. I can't taste or smell anything at all. Like, I'm just like, this cookie I can't even taste. Whatever. Took me this long to get it, so pretty impressive, honestly, as it is. Let's see how this stuff is setting up. Yeah, there's nothing there. There's no taste there at all. Energy, still looking good. I mean, past week, let's say look today. How's energy doing today? Yeah, it's down, but not that much. Those have been holding up pretty well. Tesla's up today. Let's take a look at Tesla's chart. I haven't been looking at Tesla. Look at that grinder. Really nice grinder today. Getting up towards that area of potential resistance because it was an area of support in the past. So yeah, this could be a spot for a possible, short on Tesla if it gets rejected up here. It's just too random though. Tesla's too random for me because, if we have a green day tomorrow, Tesla's going to go up. Maybe it hits 1100. I mean, I'm not going to mess with that. I'm more of a fan of buy and hold Tesla, and that's it. Hold it in the long term and forget about it. What do we got here? Starbucks. I bought those Starbucks. I'm looking at 104 as my support, as my level of hey, if it falls under there, I'm out. So Starbucks, I'm looking for a bounce back this week, and next week we'll see if we get it. I have March calls, so I'm not really worried about those. But yeah, 104 was the level that we dipped down to here back at the, looks like end of October. So as long as we hold 104, which we got close today, got like 40 cents off. We hold that, I'm in. We drop below and we close below, I'm out. That's simple play there on that one. NEO showing strong support at current levels. Let's take a look. Yeah, it has. It really kind of has now 3 times in a row. 3 of these bottoms where it's come down right in here. Let's pull it up. Let's zoom in here and boom. Looks like from like 20 under 28 is right around 28, honestly. Just from 28 to like 27.50 is a really good spot for NEO. Now, again, very strong close here in the market, based on how it looked, a couple hours ago. So if we can hold up here, NEO could have one of those 10% days, 20% days tomorrow. We'll see. I would love to see that, though. It'll be really fun for another one of those days. But it's holding up. It is holding up. Let's take a look at Hood. I haven't been following this one today. Let's take a look at this guy. Not R. I want HOD. Robinhood hit a new low today, and then it bounced. It's again. I'm telling you, I think Robinhood has a 10% plus day coming. It does. We shall see. Now, could we be setting up for that to happen for a lot of tech on Wednesday if the numbers aren't as bad, or even if they are as bad, if they're in line with expectations? Could we be looking at a possible massive bounce Wednesday if we see weakness tomorrow again? I think that's very possible. All right, Nasdaq is grinding back. Look at this. Let's go to the 5-minute chart. Nasdaq is pushing back, and we are in the gap here. We are looking like we want to fill that gap. And S&P, yeah, we're up in that gap too. Very close. We kind of got rejected there. So let's see now how the market closes out. I want to restart this platform, whatever. It's being a little wonky with my cursor. But we're down to 15 minutes left of the close. So let's see if we get that that flush out last 10 minutes of the day. Let's see if we get it. I will be interested. if so far we're holding up though. Do we look like we snag some of this? Do we snag some Mesa? Oh, hit new lows again. Oh man, this is just one's getting me really interested. Maybe tomorrow. Well, wait. I need more cash. I need more cash before I want to get it. Oh, we got to install the updates. Okay, let's do that. Replace, and we should be good to go in a second here. All right, cool. BFR pushed up. SPY puts for tomorrow. Let's see. Primarily a trader or investor. I would say I am definitely like I'm like a very nice hybrid. I feel like. The longer I do things, though, the more I have the pull to be more of a trader side. I just feel like I like that. But the problem that I have with the hybrid style is that you find yourself swinging a lot. And I did very well from 2019 through, early this past year, obviously, as everyone probably knows. Now, it was really easy in 2020. I didn't take advantage because I had kind of my 2019 kind of guidance on, and I was like, well, I kind of know how things work, and this is crazy. This stuff is up so much. It doesn't make any sense. So I didn't take full advantage of some of the opportunities, I would say, last year, which, hey, it is what it is. But now you get more experience, and you get to see different markets and conditions and stuff, so you have a better feel. But I definitely utilized the Webull portfolio as I have kind of big picture ideas. So I have the airlines for this year. I have leaps out to 2023. So you can classify that as more of an investor style. And then I like to swing trade my small caps and buy some of these things at the lows with, better balance sheets or with potential catalysts upcoming and stuff like that. So you can call that, I guess, more of an active trading style. So I have more of an active style. Like I more shoot for my goals that are 100% per year returns. That's kind of like my standard I set for myself is what I want to be able to do. And I don't think you can really do that necessarily investing. So you have to be more active. And so that's how I feel about it. But there are traders who do, 1,000% years every year consistently, and they're cash every night. So there's a big kind of divide mentally for me, I feel like. So I'll probably experiment that this year and at some point go all cash, I would imagine, and just see how it goes for a couple months and just go all cash every night and just maybe just day trade in the morning for a couple hours, and that's it. And that's my intention. That's it. Maybe have a few small swings and we'll see how it goes. But for the most part, I feel like I'm definitely like in between. I have longer term investments, so don't get me wrong. I have a portfolio or I have an IRA that I have, some bigger name stuff that I'm holding for years. I have no intention to sell that. Like Tesla's on one of those. You can even just look at holding like VOO is one of the things I always say and preach. And I tell people all the time, just hold VOO and you're not going to lose over the course of your lifetime. Vanguard S&P ETF, S&P 500 ETF. But at heart, I feel like I definitely am I want to be more active in my stuff. But I also haven't really been like, day trading. I don't day trade every day. So it's not like I'm sitting here every day going cash and taking day trades all the time. When I see opportunities, yeah, I take them. But most of the time, it's mostly swings and bigger picture approach. So we'll see. We'll see if that changes. So that puts for tomorrow. Let's see how the market finishes the day. I'm really interested to see because we've been watching that last couple minute, hard pullback. Everyone's been saying, well, that final flush in the end of the day has been kind of there. Well, let's see if we get it again. So we're up right now. Let's go back to SPY. We're kind of up towards the highs of the day. About 25 cents off the highs. And we'll see if we want to keep closing towards those highs in the last 10 minutes or so. If we get that flush. If we get the flush, like we've been kind of seeing, like everyone's been kind of, seeing, then this could be, an opportunity. You can also trade SPY puts 15 minutes after close too. We'll see. That's an LPCN. FDA tentative approval December 8th. Resubmission of NDA needed for full approval due the 28th. The problem with that is, I would say that just small cap news. I'll look at it. That could be setting up, but even FDA approval news hasn't been that impressive. You are at the bottom though. You're at the bottom of your recent range. So I mean, I get you there, but man, you could be risking. I would do a little bit of a thought process here and say, hey, what's our risk? Are we at risk of this not happening? And do we have a risk of this thing dropping, 40, 50, 80% overnight off of some bad FDA news? If not, the risk reward lines up, then it's potentially worth a shot here around $1 and got some good support. The recent range has been like from 1 to 120-ish. You're at the bottom of the range. So I kind of like that. Chart-wise, at least. Let's see. SPY down 0.5%. S&P. The Dow is now down the most. Dow is down 0.72. The Dow was down the least initially, and then, early in the day. Then everything's recovered super strong, and so you're getting these crazy bounces, and these crazy bounces, you don't get that type of movement on the Dow really as much. So the Dow is like, okay, well, hey, we're going to be down 0.7. You guys can kind of go back, maybe try to go green. It's just wild, though, to see that, hey, that we had a chance, and it's still possible we can get close. It's 10 minutes left, so it's probably not going to happen, but we almost went green after being down so much on the Nasdaq, being down so much on the S&P. Look at the Nasdaq. The Nasdaq has recovered from the lows. Almost 2.5%. That's huge. Intraday. A couple hours. It's not like, a couple days. A couple hours. There's no additional news that came out that pumped the Nasdaq, right? Like we opened up, kind of knew what was going on in the world. And then, I guess other markets were down. European markets were down, had a pretty bad day tech-wise. I know that. And then we recovered super strong. So I guess ever since European markets closed, maybe we've kind of been grinding back up. I don't know. Let's see. Great info. I appreciate it. Well, I appreciate you guys for watching these things. Now, ultimately, we're going to be doing these Monday, Wednesday, Friday towards the end of the day. We'll see. Maybe we can do Wednesday. We'll do one for the CPI data and see how the market reacts to that. But I plan on doing these things, 3 times a week now because I think it's more fun, number one. And number two, it's more useful because we can talk about stuff like just on the fly instead of there's a video idea or whatever. We can talk about stuff on the fly, see stuff happening live. And if I make any, trades and it's like, okay, here's what I'm doing and here's why. If it works, it works. Doesn't work, doesn't work. And I think it's very useful for people who are, watching and stuff. That's my take. But all I ask is a thumbs up on the videos. That's it. That's all we ask. We don't have a Patreon where we're selling our plays. So we don't do that, number one. And number two, we kind of want to keep it all free. So that's playlists. I had someone reach out. I've had people reach out and who've asked questions and stuff. If you ask questions, I'm happy to answer them in comments or DMs and stuff. Like, hey, what do you do? What's going on with this stock, right? There's probably videos already out there that I've covered, tutorials, topics, all that stuff. So I would always recommend that first for someone who has questions about the stock market or about options. I got plenty of videos there. And if you still have questions after that, then number one, your question is going to be a lot better because you're not going to be a generalized question of what's options? I'm not going to answer that because I can't answer that. There's videos that explain. I already have, but if you have a question about okay, how do you use the delta when picking an option premium? Well, picking an option that you want to trade, well, then that's a lot more specific. Well, okay, here's how I do it, and that's more useful for you because now you have something to kind of play off of. Always enjoy the lives. Hey, I enjoy doing them. I really appreciate that, and I enjoy doing them. I like to gamble, so I'll take my chances with LPCN. Hey, you know what? Let's look at it again. Why not, right? Ultimately, right, risk amount that you're willing to lose, and it's not going to go to zero. Or if it does, you'll be able to get out, I'm sure, before it does. So, it's at least it's better than an option trade where you could lose everything. So, that's kind of what drew me to small caps in the first place is that these things I knew wouldn't go to zero because ultimately, they can delist and whatever, but I'll be out before that anyway if it's going to happen. So I'm going to get out. And then I know that they're more volatile. So I'd play them for swings and stuff rather than options and not have to worry about time decay. But if you aren't worried about time decay and all that stuff when it comes to options, I would highly recommend you look at using verticals. So playing spreads and stuff because that can minimize the downside for your for time decay. So if you buy a put, right, you could buy a put. And if the stock goes down a little bit, it's still possible that you lose on the put because it didn't go down enough and that there was too much time decay in there and you lost the premium just got crushed. That's possible. But if you play spreads, you're going to kind of minimize that time decay. And that's a great way to do it. Look at this. S&P, look at this thing. S&P now is only down 0.36%. So much for that final 10-minute flush. Unless we get the final 5-minute flush, we'll see. Really nice grind back. The Nasdaq potentially could go green. The Nasdaq, look at this. We may go green on the Nasdaq. This thing is going potentially green. We are down 0.16% on the Nasdaq. This is close. We have 5 minutes to do it. It could do it. After today's bounce back, it could easily do it. So let's see if we get it. We'll be wild. We'll be wild. Appreciate your style sharing. Thanks for I appreciate you guys for watching. Like I've been saying, all I ask is a thumbs up. That's it. That is it. And I will enjoy doing it. Look at this. Nasdaq's down 0.1. We might go green. We might go green on the Nasdaq. This is nuts. Now, let's take a look at IWM, small caps. They're probably, decently red. Down 0.5%. But look at the push, though, into the close. Small caps pushing pretty hard into the close. IWM, IWC is micro caps. So you got an ETF for everything, right? IWC is down a little more. Micro caps getting hit harder, which is, where I have a lot of my holdings. At least some of my penny stock plays are some micro caps. But hey, whatever. All right. Nasdaq down oh my. Look at this. We are extremely close to going green. 0.08% red, 0.1 now. Okay, let's see what happens here. Let's see. Look at the daily charts, though. Now they're setting up. So, yes, we're red, but what this hollow candle means on the daily, I believe I have a video also on the TC Trading channel, which should be linked below. Understanding hollow candles or something like that, how to read hollow candle charts. But what a hollow candle means is it means that from the open to the close. So in this case, we're using the daily chart. So from the open of today to the close, which, as of right now, we haven't closed officially, but we're up, we're close. From open to now or to the close, we are up. That's the hollow. Okay. Solid means down. So solid could be green or red. And the red or green just means, okay, compared to the prior candle's close, are we up or down? So yes, compared to the last week's close, we're still down, but the hollow shows that we had strength intraday, and it showed that this candle, that even though the market or the stock was down today, it shows that we actually pushed back really strong into the close, and we had range back to the upside. So it tells a different, that's why I like to use hollow candles. It tells a different story, because you could look at a bunch of candles, and if you're looking at candles that are all like solid greens, well, that's telling you that the stock gaps up and just sells off. It gaps up and sells off. It gaps, and that's all it's doing. So if that tells you more about the stock's history than ideally kind of what hollows will tell you. So hollows, right? If you notice a lot of hollow reds, that tells you that hey, the stock gaps down and recovers. Gaps down, recovers, and so it has very strong bounce backs after gapping down or being down a lot, which I think is more important, at least more useful to me than just looking at, okay, it's green or red, it's whatever. So that's why I like to use them. And we filled the gap, looks like, on NASDAQ pretty much. We have filled that gap almost all the way. And that would have been a massive, what a trade that would have been had I held those. I had QQQ calls I held where I bought down here and I sold them, I sold them. Actually, I can go find them right now. I bought 380s. So I bought those for this week. Oh my! I bought them at I had an average at 170. Now they're at $4. Holy crap! That's insane. And the Nasdaq is now even on the day, and it's green. The Nasdaq has gone green today. Can you believe that? Can you believe it? 0.02% up, with about a minute to spare. 0.03% up with a minute to spare. Wild. Oh man. Let's see. NDQ broke below trend line, popped trend line, pretty decent. Let's see. Let's take a look at that one. NDQ. Let's take a look. It's pushing up. It's up towards the highs. A little bit. You're at resistance right now, so we'll see how that plays out. But $25 on the 25 break could be a big move. 25 push could be a push to the upside there. Wow, look at the Nasdaq. The Nasdaq's up 0.1% now. Look at this. Look at this. Just straight up. It has just gone straight up the last 5 minutes to close. So that that flush out into the end of the day we've been noticing, right? Past couple weeks, past couple trading days. No, not today. We are 15 seconds away from finishing up on the day on the Nasdaq after being down over 2.5% this morning. Jeez. Wow. Well, this could be, maybe this is a sentiment shift. Who knows? Maybe this is, a sentiment shift. But again, I think Wednesday is a key day for that. So we finished green on the Nasdaq today. The market's officially closed, and there you guys have it. SPY finished red, barely, but a really strong close on SPY. And then the Dow finished red. The Dow tried to close strong, but the Dow is not going to, it hasn't moved. It doesn't generally move as fast as, the Nasdaq or the S&P generally, at least as of late. More value stocks, boomer stocks, you can call it that, right? So that's insane. That's insane. AMC is got some support right where it's at right now, so I'd be looking at AMC as a possible, anything down versus $21. It's not bad, but I'm not a huge fan of AMC. But hey, check chart wise, I like this setup. So if it holds over 20, hey, it's still setting up. It's holding nice. So I wouldn't, not against it, right? I'm not shorting it by any means. As I said too, it's just not worth it, right? I don't think it's worth shorting it, but for those who want to short it, go ahead. Go right ahead. Let's see here. Any action after hours? Let me change the scanner to the after hours, and then we'll see if if anything happens, and then we'll move around and we'll wrap it up. But let's take a look. How do we finish up here on the overall markets, though? Even though we kind of came back green, right? What was it that came back green? Well, Adobe, Oracle, Microsoft was still red, Apple still red, Tesla was nice and green, Google was green, almost 1%, so that probably helped a good bit. But we did see across the board, though, that, let's see, healthcare was generally green today. That's where we saw some decent spots. Diagnostics, medical plays, biotech. I wouldn't say biotechs in general, but some of the bigger name biotechs. Because if you go to XBI, well, this is up. XBI finished super strong, so biotechs had a really strong finish. Here's XBI. This is the biotech ETF. It hit $100 today. Insane, but really good volume, really strong volume. So that's gonna be the bottom potentially for now. We'll see. I like XBI a lot as a bounce back play this year. But you got to give yourself time. Either you buy the ETF or you give yourself time on options and you make sure you're not going super far out of the money. And I think you'll be okay. So I think you'll be fine, but just be a little cautious there. But yeah, still across the board though, you go back here, most stocks were still down. So NASDAQ went green, sure, but 71% of stocks were still down, 25% were up today. So we're still across the board, a lot more stocks down than up. So it's kind of been the same story we've been looking at the past, couple of months. Where I think there's we've already been in an underlying bear market for a lot of growth for a while, but, it's been accelerated as of late with some of the bigger pullbacks in the indices. And so now the question remains, do we ever get that turn of, do we get, okay, now small caps or growth pushes up, whereas the indices chop along and, maybe they go red or they go kind of even, or they're slower. They're not as, strong as some of the underlying names, the higher beta names, as we call them. We'll see. I'm curious, how did Disney finish today? Because Disney's been a strong one Disney, not great. It finished less than 1% down, but it held that level. So I like Disney a lot too. Next couple months, as long as into the earnings, they have earnings early February. Next couple weeks. So Disney's been holding, as long as it holds 154, I like it. So it's got some pretty big wicks to the downside that get, bought back up every time it comes down. Prior resistance was here at 154. Guess what? You broke above and now it's new support. So it's setting up and I'm going to ride that one until either it breaks below there or it goes into the gap, and I'm going to sell into the gap and lock in my gains. I have options in my Robinhood portfolio. I think I put options of Disney in there. I have 160 calls. So yeah, we're a couple dollars off from the money. So have those out to March. Could have been a lot worse for sure. It could have been. TQQ had been best play today. Did very well. Yeah, that was nice. I, unfortunately, had QQQ calls that I sold at like, before I sold them at like $2 and they went to 4 something. So, okay, whatever. But TQQ, very nice. This is a great one. You can play this one just shares, rather than playing options on huge pullbacks. When QQQ pulls back hard, this is a good one to play for some leverage on that too. How do we see? Let's take a look at Rivian. Thanks for the stream. Catch you next one. Awesome. Appreciate it. We'll see you guys. Wednesday, I'll be doing another one. We'll do one Wednesday. Rivian still finished down pretty hard. Yeah, man, this one is going to pay me. I can't get mad, but this one's going to hurt me because I really should have. I had it charted out. I should have taken advantage of this short right here. I really wanted it there, but I didn't do it. Ideally, shares would have been better, but options I was looking at, whatever, it is what it is. Best Buy finish was nuts. Yeah, I mean, it was insane. QQQ went green, insane finishes. This tells me that we should see a strong day tomorrow. I would imagine a gap up. We'll see. I don't know. And then it sets the stage for Wednesday. So what does CPI come out with, and what happens there? Oh, man, I mean, we will see. We will see. But that said, after hours, not much. I'm not expecting much in the after hours, at least for now. So I'm going to wrap things up. Appreciate you guys for tuning on in. That was a fun finish to the stream. So we'll see what happens tomorrow. We'll see what happens, obviously, Wednesday. We'll see if we can get the stream in the morning hours. If not,